Alright guys, so welcome back to your financial apocalypse update, and we have a lot of ground to cover today. The US and China, they are struggling in Latin America for influence. It's a wealthy region rich with resources. Now the US wants to reshore their industries back home, and they suddenly realize, hey, we have been neglecting countries like Brazil and Argentina for far too long. And what made them have this realization? Let me guess, I think it's China. Then we have bonds globally starting to collapse in price. Yields are shooting through the roof and central banks are beginning to panic. But let's go through the economic war raging in Latin America. The US head of trade, Catherine Tai, is in Sao Paulo, Brazil, and she has a message for people there. Consider the risk of China's Belt Road Initiative. And this is the US trying to play catch up. Brazil wasn't even on their radar until China began building railways and factories in the country. The US encourages our friends in Brazil to look at the risks in today's economy. Now, this is the best part. Sovereignty is an aspect that the US government is trying to preserve in the world economy. If China's economy is collapsing, like all the Western media is saying, why is the US so concerned about China's presence in Brazil? Why not just wait for Beijing's financial plans to crash? Simple, because China's presence in Latin America dwarfs the US. The Brazilians, they understand the benefits of working with Beijing. Brazil's agriculture minister, he caused a stir in Washington. He told the world that Brazil should join China's Belt and Road Initiative. 2025, guys, is going to be a year of big uncertainty. You have the spectre of a global trade war coming from the US, and the EU is also putting up protectionist barriers. In trade, China is Brazil's biggest economic partner. The Chinese, they are buying a ton of food products from them. If tariffs are heading up, it means the US and Europe are going to protect their own farmers. Brazilian exports to the West, they are going to drop. But there's a silver lining to this for Brazil if they align their economy closer towards China, and here's why. When Trump started his trade war, countries around the world slapped the US with retaliation tariffs, and this caused US farmers to lose over $27 billion in sales. And guess which country cut away the most imports of US wheat and grain? It was China. Almost 80% down, and that's nearly $26 billion worth of trade gone. Beijing will obviously need to source it from elsewhere. Over 50% of China's total imports from Brazil is agriculture. So, if you're the Brazilians, you can just read the tea leaves. If the US clobbers China with a 60% tariff, Beijing will simply cut away US food imports. And there's going to be a windfall for Brazilian farmers. Their exports to China could explode overnight. It's key to understand why the US is terrified of China's involvement in Latin America. The region is home to a treasure trove of rare earth minerals. Argentina has a ton of lithium. Peru and Colombia, they're also within the lithium triangle. Brazil has a ton of valuable reserves as well. In graphite, they have 26% of the world's reserves. In rare earth minerals, Brazil has the third biggest reserves as well, just below Vietnam and China. And this is something the US and China, both of them want to secure this. These are the vital inputs for major industries including EVs, semiconductors, and solar panels. The US is basically freaking out here.
The issue is to follow that history to ask why we stopped producing rare earths and why so many of those mines shut down. And it's a very familiar pattern at this point if you follow the impacts of China's trade and industrial policies on the rest of the world. China at some point very, I would say, smartly recognized the relevance of rare earths. And they started producing and selling to the world market at prices that we could not compete with. And our producers successively shut down. So the advantage in terms of China's dominance isn't necessarily a natural advantage. It's not that they have more rare earths, but that they were able to pursue coordinated industrial and trade policies that allowed them to corner the market.
And here's the problem, what the US wants contradicts reality on the ground. What Brazil needs is development, and China, they are bankrolling Brazil. They are providing the money and all the investments. They have been in Brazil and Latin America for quite a while the US, well, they have neglected the region. According to Brazil's development bank, we must have a relationship with China. Their competitiveness is unsurmountable. We need to engage in partnerships to bring investment to infrastructure. While the US is building military bases on planet Earth all around the globe, China's strategic push is economic architecture. They are building railways, roads, ports, and infrastructure. Does China benefit from this? Of course they do. It's not charity. But countries like Argentina and Brazil, they benefit even more directly. They get to expand trading relations with the Chinese economy and BRICS. President Xi is heading to Latin America after the US elections, and one of his pit stops will be to open a megaport in Peru. This is one project that's going to change the regional economies. China's Chankay megaport in Peru is a game changer. It's a gateway for South American countries to export directly to Asia through the Pacific Ocean. Instead of sending goods to Mexico for a 35-day voyage, this new route is more efficient. Goods can reach Shanghai in only 25 days, and that's money and time saved in global trade. All the surrounding countries, including Chile, Argentina, Bolivia, and Brazil, they are going to benefit from this. If the West goes full protectionist, they can simply reroute trade to Asia. Brazil is already planning to export soy, corn, and other products through this megaport. More trade equals a stronger economy, especially as we head towards the storm in 2025. China's strategy of economic development is simply superior, and they did it without building a single military base. At this point, it's mission impossible for the US to block Brazil from China's Belt Road. They are simply 20 years too late. Now, while the US is struggling, global central banks, especially in the G7, they are also facing a crisis. Their economies are weakening, and we are beginning to see a global bond collapse that is pushing bond yields up. And the genesis of this problem lies once again with the US itself. The US 10-year yield has risen above 4.2% for the first time since July. Inflation is rearing its ugly head, and fiscal fear is just spreading across the markets. Central banks, including the Federal Reserve, they are beginning to realize that hey, we don't really control the free market. Yes, power can cut the Fed funds by another 50 basis points, but the demand for US Treasuries is controlled by the free market. And this is especially true for bonds on the longer end of the yield curve. The Treasury term premium is now heading back up to 2023 peaks, and this means bond buyers are demanding a higher return to buy longer term US Treasuries like a 10-year bond. Why is this the case? Simple. Investors believe inflation will surge back up again. Thanks to the Middle East and the looming trade war, inflation in the US could spike back up. We don't even need to look far for this one. Blinken, where's he going? He's flying all the way to the Middle East in his 11th attempt at a ceasefire, number 11. He's in Saudi Arabia to broker peace, but do we seriously think it's going to work? It's a last ditch attempt. If Israel strikes Iran and the oil fields blow up, we could get a chain effect across the entire Middle East. Then we'll really see inflation surge back up. Another worry is the fiscal situation in the US. How much is the US government going to spend going forward? Because that's going to affect the supply of bonds in the market. The odds of Donald Trump winning, according to the betting markets, is around 60%. And there's a very big chasm between him and Kamala Harris. Elections are less than 2 weeks away. The market knows this and they are factoring in Trump's budget plan. How much spending will Trump embark on in 2025? The bigger it is, the more bonds will flood the market, and as an investor, you'll demand a higher yield to buy US Treasuries. The CFRB is projecting a horrible figure going forward. For the next 10 years, Trump's economic plan will explode the deficit. It would likely raise the US deficit by $7.5 trillion. In the worst case scenario, this could hit over 15 trillion. Even though Trump wants to raise revenue through tariffs, all other expenditures will cost the government even more. You might bring in 3 trillion in import tax revenue, but tax cuts alone will cost over $5 trillion. And this is why bond yields are flying up. The market is afraid of a fiscal explosion. In other words, We have a fiscal storm about to slam into a tsunami of debt. It's not just spending that will debase the dollar, it's also additional debt burden the US will pile on. By 2035, the US national debt could reach 125% of GDP. However, if Trump goes ahead with his spending plan, this number will go wild. We could see an average increase to 142% of GDP. If things get crazy, the US national debt could hit a staggering 160%. And this pushes the US closer towards defaulting. And in the short term, the interest payments will also get out of control. So, investors, we are faced with a double whammy. US bonds issuance won't stop, it will only increase. And Trump is also going to spend more, which will make inflation stay higher for longer. And that's why bond yields are soaring higher. It's not a coincidence. But central banks around the world, they're starting to panic. They can't wait for rates in the US to calm down. Earlier this year, the ECB cut rates for the third time, front running the Fed. The EU economy is in trouble, and despite the risk to inflation, rates have to come down. And now the Bank of Canada is also taking action. Policymakers cut rates by a whopping 50 basis points to stick the landing. In other words, they are hoping to avoid a recession. Now, if that isn't a problem, why even cut rates in the first place? Canada, like Europe, has to stimulate their economies because demand is falling. Consumers in Canada are starting to spend less. In Q4 this year, real consumption in the country is expected to fall by nearly 1%. The labor market is soft, and younger Canadians they are experiencing an increase in unemployment. And let's not forget the coming trade war with China. The EU and Canada have confirmed tariffs on Chinese EVs, so we can expect retaliation in 2025, especially if Beijing manages to boost their own domestic consumption. So the global economy is in a state of flux and panic. The Trump trade is starting to spook everyone out. The biggest risk, and we can't underestimate this, is the global trade war. That will simultaneously unleash massive deficit spending while crushing US consumer spending as well. During his economic club speech, Trump outlined his plan, and almost all are big deficit boosters. We have retaliation against unfair countries, and that probably refers to China, rebalancing trade with Europe and Japan, clobbering US companies that offshore production overseas, building up the US military, as well as rebuilding America's industrial base. All these adventures require a ton of money and more fiscal spending. But at the same time, there's also geopolitical risk. This trade war won't be done in a vacuum. Other countries, if pushed hard enough, will retaliate. It's not unthinkable for China and even the EU to hit the US back with economic punishments. They have done it before in the past, and they can always do it again. So, this is a very dangerous time for the economy, guys. The global debt crisis is about to get worse, but global trade is about to nosedive as well. But let me know what you think. Will Brazil embrace China, or will they somehow listen to the US? And will the bond market continue to implode? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.